Hello traders, Gary Wagner here. Approximately 10 o'clock in Honolulu, making it 4 o'clock in New York. It is Monday, the 17th day of September, and this is the daily report for gold and silver. We do have the precious metals markets under pressure this morning. There is no doubt. As you can see, current print 1758. 1758, 56 right in that area. The low is 53.20, high is 1777. It is currently trading off approximately $14 to $15 on the day. Silver also under some pressure this morning. That is trading off about 70 cents on the day, so it's a pretty sizable move, but when you get these big moves up, you tend to get the big moves down. Current print is about 34.08. with a low of 33.72 and a high of 34.82. So quite a range in the day today. This morning I wanted to start off with silver rather than gold because there's a couple of interesting things that I am seeing in the silver market, and I think it warrants your attention. You know, we've talked about the fact that in the silver market, we've seen these dramatic spikes up. After the spikes that we would see, such as right in here, you'd get a series of really a resting area or consolidation. The market wouldn't really move down a lot. We're looking at a 720-minute chart, which simply means that there are 2 candlesticks per day. And as you can see, we'd get another spike, a little sideways move, and so forth. Now, my question is today a little bit different? And that's something we'll really have to wait and see. And typically, we would simply want to see what's called a confirming candle. And on a confirming candle, for example, right now what we have is basically a 3-river star in the evening formation. As you can see, you've got the long open, which is the green candle here. You've got 2 dojis, which is where you get consolidating candles. The open and close are very, very equal or the same. And then currently on this particular bar, which of course, once again, this is a half day, what you're getting is the red candle, which would seal that particular type of pattern itself. However, you would want to get a confirming candle. The confirming candle would be on the following day, meaning tomorrow, we would see a continuation of this market trading lower. And all I have really done is I have converted our half-a-day candlestick chart into a full-day candlestick chart. As you can see, 1440 now on the time. And what we see is it's still plotting out the classic 3-river evening star. You can see our long up day here. This is our green candle right in here. Of course, we've got a doji planted right in the center. That's our star. And then we've got our red candle. However, red candle is really not showing the kind of strength in terms of downtrend that we saw on the uptrend. Also, in silver, this is following this tremendous move to the upside in which we saw a 4% gain. Just an incredible move. And so my sense is that unless it really breaks below, call it 33.50, even getting close to around 33, that this is probably simply a consolidating area, and our positions, our long positions, should remain long. Of course, we do have our stops that are below 33 right in here. We're nowhere near those yet. So my sense, at least for the time being, is just to maintain our long position, but be very cognizant and aware of the fact that what goes up, of course, can in fact go down, and in fact usually does. Now, we are currently looking at the continuous contract. This is off of the COMEX gold, also 720-minute candle, currently trading 1759.20 in the cash. 61.40 is where it looks like we're going to close, or have closed, I should say, in the futures markets over at the COMEX. And here's what I find that is noteworthy this morning. And the one thing that I'm looking at is as follows. You can see this one particular line that I believe we want to see it hold in terms of support. And I'll show you where that's derived from. But the one thing that we are seeing right now is that it's still trading above its moving average that we've plotted. At the same time, you can see that the low that we got, and I believe this low is approximately 53, that in fact is holding. Now, when we go ahead and compress this chart a little bit, you'll see where we have actually derived these points from. And this particular point where I'm looking for support to hold right in here, that is derived from a couple of the Fibonacci retracements that I've done. This is our short-term retracement. It begins really back in July, as you can see back here. And this is a long-term study, of course, and it's the 23% level, 1755. Now, we have moved to our cash market, so that's still actively trading. As you can see, 1758, 1759, right in that area. The prints are coming in. And when we look at the big picture, you can see that it's very much a small blip on the radar screen, so to speak, when we consider how the market has actually traded, the size of the move that we have witnessed, and what we are looking at now. We do have some profit taking going on. There can be no doubt about that. But I think that one of the precipitating long-term factors has got to be the bold move made by Bernanke, in which we have an open-ended monetary policy, which is QE3, a monetary easing program, and the effect that it's had on our dollar. Because when we take a look at the dollar index, let's go ahead and put that, you can see that the dollar has remained under pressure. This, of course, this is our weekly chart, but as you can see, we are no longer at 80. We are no longer even at 79. We have broken through that, and we're currently at 78.98. So we've broken through that 79 barrier, and my belief right now is that the dollar is absolutely headed lower. Where is it headed? Well, I think that it will have a couple of peaks and valleys, but I really do think it's going to head towards the bottom of this channel, and that's at around 76. It's going to be an interesting week, to say the least. We'll keep our eyes and ears tuned to the marketplace. There's a lot of factors coming up. We do have some information that will be coming out of the European Union. That's going to be forthcoming this week. We'll also be watching the dollar as well as the oil market. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.